Welcome to The Riff, where writer and investor Bern Hobart and I discuss the major inflection points caused by technological change. Our weekly conversation covers the obvious and not so obvious ways in which markets and businesses will adapt as a result. Let's jump right in. Hello, sir.
Hey.
Hey, it's good to see you at Hereticon.
Yeah, absolutely. That was fun.
Before we get into election stuff, any reactions or reflections on Hereticon that should go on the pod?
I think there's an interesting question about how heresy has changed over the last couple of years, like even since the last Hereticon, where it does feel like one of the things that inspired the original Hereticon was this observation that there was an election in 2016 and it was pretty close to 50-50. And then there was a candidate who was just like completely anathema to support in, fairly large cities where people should be kind of sophisticated, open, tolerant of multiple viewpoints. And there's also a justification for that. Like it is like Trump is an unusual candidate, and you can definitely have lots of really good reason to oppose him. But I think that observation was kind of interesting, that there was maybe a monoculture in tech that didn't really need to exist, or that was hard to explain and was worth resisting. But now you can't make that claim anymore. Like, maybe there is some other thing that is like close to 50-50 nationally, but completely unacceptable among tech people and, other like high status professions. But it's not what it once was. And that means that the two ways that a heretic can go, or that a self-styled heretic from a couple of years ago can go, would be, one, you say, well, actually, when I supported Trump, that was just my concession to moderation. I'm actually much more extreme than that now. And then another one is you could say, well, I support these things still. They're just more mainstream now. And then I think you've lost a lot of the excitement and fun of saying something controversial. In fact, there was at Hereticon, the more heretical thing was to say that, yeah, on balance, Harris is a slightly better candidate, and so I'm going for Harris. Or I like some things about Trump's policies, but I think that January 6th or whatever else just completely rules him out as an acceptable person to vote for in America. And so, yeah, you just maybe in that sense, Hereticon 1.0 served its purpose very well. The Overton window has been widened, but just relentlessly widening the Overton window eventually just has negative payoffs. Eventually, it just means that you just seek out like randomly controversial things, or that you always define yourself as part of this oppositional culture. Like, actually, I think maybe the libertarians would be an interesting example of this, because in many ways, I think I'd have to double check the platforms to be sure, but my suspicion is that if you look at party platforms from like half a century ago, that the libertarians have actually accomplished more of their goals than any other party, where it's like taxes, top marginal tax rate is down since then. And there was that burst of deregulation in the 70s and early 80s, kind of a mixed bag since then. On immigration, border, it's much more possible for people to move to the US. And then, of course, on social issues, legalization of more drugs, and on gay marriage and things like that. It's been just total libertarian victory. And I think there's, if you told a libertarian in, say, 1974 that these are the viewpoints of the major parties on these particular issues, the libertarians might assume there had been some kind of really big transition where the main parties were the libertarians, and then whichever of the Republicans and Democrats had survived, or maybe they would have like merged into the statist party. But that totally didn't happen. Actually, what happened was like each party absorbed some of these libertarian issues and also absorbed issues that were just not partisan issues at all beforehand. And the party system turned out to be a lot stickier than the beliefs of those parties. And we see another iteration of that post 2017, where like a lot of the people who were part of the Democratic base are now Republicans, and vice versa. So the parties they did this trade where a lot more blue collar workers and lower education workers moved to the Republican side, and then a lot more high earning elites moved to the Democratic side. But the overall balance of power is really not that different. It just slowly converges more and more on 50-50 as each party gets a little bit better at targeting voters, and as each platform, as the market in political ideology gets more and more efficient. So yeah, all that is to say, it's, if you want to be, if you call yourself a heretic, you're calling yourself a heretic in reference to a particular set of beliefs at a particular time. If you're just a universal heretic, then your viewpoints have no information content, because if you get everything you want, you just have to switch all of your opinions to something else. So, but I do think like it's useful to bring together a bunch of people with heterodox views and just get them to argue. And there were interesting discussions about things like, do vaccines actually work? Where I had not really gotten the sort of cogent, informed, heretical view that no, they don't. And I still bet that, yeah, they probably do. And I'm still, I still get vaccinated. My kids still get vaccinated. Like, on balance, it was not a persuasive argument. But I think that one of the things you always have to recognize about contrarians is that they almost always have better information on the issues than you do. Now there's this sort of like default soft atheism, but back when internet atheism was big, it was pretty common for the internet atheists to be a lot more familiar with the Bible than people they were arguing with. Not in every case, but in many cases. And I think you'll find that with a lot of issues, that like the people with really weird views do have a lot more data often to support those views. It's just that if you just enjoy trolling people and you enjoy this oppositional thing where, because you're always opposed to the people in power, you never have to make hard choices about what to do once you're in power. That can be fun. It can be a way to learn a lot, but it is ultimately fruitless. So like, if you're a heretic, if you're never a heretic, that's a problem. But if you're a heretic for your entire life, well, everyone else is always changing their opinions, that is also a problem. It is just a different kind of conformity. It's like the low agreeableness conformity. But I do think Hereticon is much more tilted towards like, there are interesting people with weird ideas. Those ideas have shifted closer to the mainstream. We kind of haven't figured out what is the meta Overton window of like, what views are acceptable to people who think that there should be a wider range of views and are not just totally anathema to everybody.
Yeah. It's interesting. It's turned from sort of the conference of heretical ideas to basically the tech right and friend, tech adjacent right and friends.
Right. It's tech adjacent right and right adjacent tech.
Yeah. No, absolutely. Let's segue into election stuff. So you have some good thoughts around how even just the nature of how we think about elections has changed because of prediction markets. But the thing I really want to know, and our listeners want to know, is how do we get rich? How do we trade on if we're so sure that Trump is going to win, or if we're so sure that Kamala is going to win, what should we be doing here?
I sort of think that's mostly the wrong question, because it's just such an incredibly competitive market. And it's also a market where you shouldn't be all that confident in your variant views unless you've identified a specific material error that everybody is making and you have high confidence that they'll correct it next time. But you're operating in this environment, and Nate Silver was complaining about this, where he said there was a recent round of polls where every poll was like up within 1.5 points of his prediction. And he realized that the pollsters are just dragging their polls closer to that median. They're just shrinking the variance because they don't want to look really bad and have a crazy outlier poll. And that's a reasonable thing to do if your poll is trying to be a prediction of what the outcome will be. But if your poll is just trying to be whatever it is, where like you have a methodology, you ask a set number of people a certain number of questions, and you're some degree of transparent about how you turn that into your estimate, then it's actually a disservice to the analysts to try to make that poll adjust for what the consensus is. Like you want the poll to be a fresh new data point that is only influenced by the responses that people gave and not influenced by other stuff. And so this is, I guess, like talking about the election. So for viewers who are interested in context, it is roughly noon on election day. So nobody has known anything for the entire duration of the campaign, but this is the point of maximal ignorance and the point of like maximum potential embarrassment if we make any definitive claims. And I think in a very early episode of the Riff, I did say that I thought it was 50-50 and that I heard a good argument from Nate Silver on why it's roughly 50-50. And that argument was actually tied to the fact that it was going to be Trump and Biden. And so you just had two people who've been public figures for my entire lifetime. And since I'm right at the median age of Americans, like the median American has, like, these people have been famous for longer than the median American has been alive. So like, yeah, there was nothing to change your mind about. And then it turned out the election became more of like a referendum on Trump, and that Kamala was like very, smoothly swapped in for Biden when it was clear that Biden was just not going to work. And then we got right back to this 50-50 dynamic. It just turned out that Trump is just such a such a weird aberration compared to normal politicians that it is still Trump versus whoever, no matter whoever happens to be. You'd probably have like slightly different marketing if it were someone else running against Trump, but you'd end up with roughly the same questions, the same confusions. And so I think on the idea of polls, like pollsters do want to adjust for the fact that people are not consistent in how they respond to polls, and they're not consistent in how likely they are to pick up the phone. They're also not consistent in how likely they are to admit what they believe. But I think there is this possibility that the shy Trump voter phenomenon exists more in pollsters' models of how to adjust the numbers than it does in the actual hearts and minds of voters. It's just for like very unpredictable reasons more socially acceptable in 2024 to be a Trump person than it was in 2016. I don't entirely get that. Like, it does feel like Trump is a more polarizing figure after his first term. I think the depolarizing thing you can say is some combination of look at what he did over his first term. He wasn't really serious about a lot of the extreme stuff, or look at what he did over his first term. He obviously cannot accomplish all of this extreme stuff that he dearly wants to accomplish. But either way, like I think that if you look at the polls and you assume that the error is of the same magnitude and in the same direction as the last couple times, you have to ask yourself, like, did the pollsters not know that they were wrong and what direction they were wrong? And if they make that adjustment and then voters get a little bit more willing to say that they're Trump supporters, then you actually have them over-indexing on Trump. And so you get like a correlated loss. And then even further complicating things, we do have early voting numbers, and those numbers are what they are, but they're also completely impossible to compare to 2020's early voting numbers. You just have very different correlations between early voting and party identification, and the sample size is small. So like anyone who has a really high confidence view, my guess is that they are underestimating the extent to which other people are factoring in whatever their special view is. Nate Silver actually, I think in 2016, the thing that made his model give Trump much better odds than other people did was that he did take into account that there would be correlated errors and like correlated swings across different states, such that if you have a bunch of swing states that are slightly Hillary favored, there is the conditional probability of Trump getting one of them goes up a lot if he's got another one of them. So it was basically, I think Silver's, like, the main thing that Silver did right was knowing that there were these correlated swings, and that therefore the odds of a big Trump victory were not just the cumulative odds of Trump winning a bunch of 40% chance things, that those were actually not completely unrelated, completely independent events. So yeah, all that is a long-winded way to say, if you're betting, have fun. You are making the market more efficient, and you are making it much easier for me to just hit refresh and see what's actually going on. But you're probably not, you probably don't have a big edge, but since it is 50-50, and since the prediction markets are a lot more liquid than they have been historically, you can put a lot more money to work. Like, there will be people with great bragging rights. It could be that Frenchman is just, a famously successful trader after all of this, but it's also possible he got totally wiped out. Or yeah, that by the time you're listening to this episode, he may have been totally wiped out.
I heard that a couple sort of non-obvious effects of what happens here is, one, that voters tend to vote for whoever's winning or something, so that the polls are somewhat, or sort of market results are somewhat self-fulfilling in that they influence voter behavior. And that's a response to someone who says, why do we care about all this stuff? It's a coin flip. We'll find out in a couple of days what happens, that there is some sort of, influence behavior that this influences, but then also that there seems to be this almost like efficient, like market thing that tends to, like, why is it always 50-50? Or the game theoretic.
Well, the why is it always 50-50 thing, like that is just the result you'd expect from a two-party system where whoever wins the majority of the electoral votes gets the presidency, and where you don't have like a parliamentary system where people assemble coalitions and form a government after they know what the voting results are. Like in that system, you would expect that if there's a party that is like 55-45 favored in the majority of elections, there will be some interest group in that party who knows that if they switch to the other party, they have turned that party from just, a rump party that exists to lose elections to a party that actually has a viable shot at the national elections. So whatever issue it is that is like the weakest part of the winning party's coalition can move to the other party and suddenly make that party viable. And there's an extent to which Trump sort of did that with immigration and trade, where immigration was a more Republican flavored issue. I think trade and trade protection was more of a Democrat flavored issue in the 90s and 2000s, though not like it's tricky because there were intra Democratic fissures over, do we like free trade? Do we love trade deals? Or do we worry that this is big companies shipping American jobs overseas and, getting rich off of it? But I think it was net more of a Democratic thing. And that did mean that Republicans just had this electoral disadvantage where a lot of union workers would just by default vote Democratic, and they were just a very reliable category for the Democratic Party. And Trump was able to identify that, or like implicitly able to identify that as an opportune set of voters to go after. And he seems to have mostly gotten them. So that's why you get 50-50, is that anything other than 50-50 is unstable as a coalition, because it means that there's a huge incentive for someone to defect from the winning coalition and then be the reason that the other side is now the winning coalition. And then I think that's probably getting stronger as an effect, just as the media environment gets more liquid, as it gets easier for people to become high profile politicians because their clips get shared rapidly on social media and they can go pretty direct to their supporters. And then their supporters are really, really jazzed by the idea of having been an early backer of someone who turns out to be really, really important. And I think both Trump and AOC have a lot of that, where people feel just really invested in their success because back when they were an underdog, those people were still backing them when the candidate was, I think AOC was seen as, I think, less of a joke and more of just like meaningless long shot thing. And with Trump, yeah, it was people felt very vindicated that after election day, they could ask like, who's laughing now?
Hey everybody, Eric here with a word from our sponsors. Our sponsor for today's episode is Carta, the end-to-end accounting platform that's purpose-built to power the strategic impact of the fund CFO. For the first time ever, private fund operators can now leverage their very own bespoke software that's designed from the ground up to bring their whole portfolio together, enabling formations, transactions, and distributions to flow seamlessly and accurately. The end result? A remarkably fast and precise platform that empowers better strategic decision-making and delivers transformational insights on demand, timely K1s, holistic fund performance data, and so much more. Come see the new standard in private fund management at carta.com/investors. That's carta.com/investors.
But one thing I'm surprised by is basically, why don't more candidates try to take issues that are like, just more popular and, turn the 50-50 and like take issues that have, 80% of, popular support. It feels like they're not as responsive to voter sort of preferences as they might be incentivized to be.
Yeah, I don't know. I think that's much more of a David Shore question than a Vern Hobart question. It is a good question, but I think it's something where like if I knew offhand, the ideological stories of a couple dozen prominent politicians, then it would be easier for me to answer that. I don't know for sure. It does. I think one piece of it is just that it takes a while for someone to get ramped up on an issue. And there's like ramped up in the sense of you understand the policy trade-offs, but is that really what you need to actually persuade the American electorate, like to persuade that median voter? Probably not. But there is a ramp up period of just defining yourself in terms of that issue and making that issue synonymous with you. And that's something that actually does take time and does take effort. And I think if you look at something like Bernie Sanders on healthcare, where he is in this position of basically always telling his party they could move a little to the left on healthcare, or they could expand Medicare a little bit more, they could make these programs a little bit more generous. Like, that is his thing, but it's taken him a long time to actually get to the point where that is a thing that he is reliably doing and a direction he's reliably tugging the party. And there's also, for a lot of high profile issues, there is going to be a lot of competition. So you sort of have to do the sort of venture thing of, you find an issue that's not a big deal right now, you make it your issue knowing that it will be a big deal in the future. And that, again, is something that I think Trump did, where immigration, it was something where, yeah, the Republicans did have a little bit more of a restrictionist view than Democrats, but actually the trade thing was kind of tied into the immigration thing, where whether you were worried about competition from foreign goods or competition from foreign workers in the US, like either way, if the US border is a little bit less porous to the movement of people or of goods, then those workers feel a little bit safer and more secure. And also they feel like the government has their back, which I think is a really important thing for politicians to do, is just to make voters feel like there's actually someone looking out for them, actually someone who's thinking about their interests and is trying to pursue policies that favor those interests. And that's like, politicians, I'm sure some people get into politics out of just pure lust for power. Perhaps it's a lot of them, but I think a lot of them do view the political system as a way to enact positive change for people they care about. And it's, not just like immediate friends and family, but like whole categories of people where they feel sympathy for these people and want to do things that make their lives better. So yeah, you have some incentive to do that, for politicians to attach their name to a particular set of issues that have very high approval, but it's just hard for them to do it, and it takes time.
Yeah. Is there? I do want to segue to sort of AI at some point. Is there anything more on the election that's worth getting into before we do?
Yeah. Let's make fun of Nate Silver's critics for a little bit. So Silver at the Manifest conference in 2023, he said it's basically a toss-up election. He probably won't bother publishing a model because everyone will just yell at him. And then he did publish a model. The model showed that it was basically a toss-up election with some fluctuations, and everybody yelled at him. But I think what's useful about that model is, like, if you do think it's a toss-up election, you do still have to ask yourself, how do you update based on new information? And I don't think that it's a trivial and straightforward thing. I don't think there's a really obvious range in which the odds should have fluctuated. And I haven't actually seen anyone produce their own chart of what they thought the odds were, where it was always 50-50, but, fluctuated between like 45-55 and 50-50 versus getting as high as 60 plus or something like that. So I think knowing what the amplitude of those changes does tell you something. Like, it does tell you basically how much attention you should pay. And I think that is like the actual reading of Nate Silver's work over the course of this cycle is that, yes, it's 50-50, but also there were things that swung the odds pretty dramatically in different directions, and that there were just points in time where, had the election been held, it would have been a landslide in one direction or another. And that's very different from an election where, if you'd held it any time over the summer, it would have been a coin toss. Like, there were definitely points this summer, like right after the assassination attempt, for example, where there's no chance it would have been a coin toss. Like, it would not have been 50-50. And so I think that is useful information. And I also think that the other flip side of this, and unless you publish this episode really, really quickly, this will be useless information. But the other side of an election is 50-50, and therefore all the trends are mean reverting, and you should heavily discount any information that you get over the course of the election. But that also means that once it's actually election day, like once the information is not, here is the best guess as to what will happen in Pennsylvania, instead the information is, here are the votes cast in these parts of Pennsylvania. Once that happens, like, you do have to update. And because you're close to 50-50, 50-50 is also the point of maximum leverage, where every new piece of information either tells you this person wins or this person loses. So suddenly those same moves do really, really matter. And so that's something that I think is another takeaway from Silver, is that we should expect to see much bigger swings just over the course of election day. And, depending on which market you're looking at and whether it's defined based on which major publications call the race one way or another, or on who actually gets inaugurated, you'll still see some exciting volatility.
Let's segue to, why is it reasonable to believe in AI apocalypse but not short the market?
Okay, yeah. So I love apocalypse trades, just like the concept. I don't really do them, but I like them. And the thought experiment that you want to use when you're thinking about bets on existential risk is, if you get a push notification on your phone that says North Korea has launched a nuclear weapon and it's going to hit you in 10 minutes, what financial decision should you make? Assume that you have the latest version of Apple Intelligence, so it has automatically said I love you to all your loved ones. It has summarized all the I love you texts that you've received back in your last few minutes of life. So having gotten that kind of thing out of the way, you can focus on what really counts, which is having an optimal portfolio. And so you might think to yourself, okay, SF is getting nuked or Austin is getting nuked, and therefore I should be betting against American equities, and particularly companies that are headquartered here, because they all get wiped out. But if they get wiped out, you get wiped out. And so you don't actually collect on that bet. Whereas if the push notification is a false alarm, but a lot of people receive that notification, then they have an incentive to sell stocks. So like a Japanese investor, for example, they have an incentive to sell US stocks if the US gets nuked by North Korea. But you have a different payoff function because you only collect in the event that it's a false alarm. So you should actually be buying US stocks from foreign investors, and you would be long. And then if you die broke, but you're already dead. You don't care. If you live, then you actually got a little gain. And the market does not react all that strongly to existential risk. Market was not incredibly happy about the Cuban Missile Crisis, but didn't collapse. And I think some of that may have been people asking themselves, if I did sell all my stocks, I would just be a corpse with a lot of cash rather than a corpse with slight, equities that have a slightly lower dollar value. Now with AI, you have an additional complication, which is that the apocalyptic vision of AI does involve AI interacting with the real world economy, and it involves interactions that are positive sum until they become very negative sum. So AI optimists on any given day, like the more pessimistic you are about AI, the more optimistic you should be about NVIDIA's next quarter, because every time more GPUs are deployed, that brings us closer to the end of the world, but it does mean more GPUs got sold. Every time Meta launches a new version of Llama, it means we have more powerful models and we can't control their deployment because they are in some sense open source. So again, closer to apocalypse. But every one of those is also probably positive for GDP, positive for tech stock valuations, et cetera. So the internally consistent thing for someone who's worried about existential risk and things that's happening really, really soon, the consistent thing for them to do is be levered long every company that has economic upside from AI, with the explicit plan of at some point flipping from I'm betting these stocks go up to I'm cashing in my bet and using that money to avert the apocalypse. So it's basically like you pyramid, you're out of the money, NVIDIA calls until you've made enough money that you can personally buy the rocket that is used to blow up the data center. So I think that's an internally consistent thing to do, but I would also not expect someone who was literally planning that to tell someone that was their plan and that's why they're not short the market. But I don't actually think it makes sense to short the market if you believe in existential risk from AI. Now, if you believe that AI will be net harmful, but maybe it's net harmful in the way that leaded gasoline was net harmful, where it actually solved one problem. It solved the engine knocking problem, made cars run more efficiently, but then it caused a lot of brain damage for a lot of people. So net very bad. In that world, you do want to be short. You think that there's a world where there's this benefit and there's a cost that more than outweighs it. But that would be a very, very unique view of AI pessimism, which is actually more in the AI skeptic camps. The AI skeptic camps is basically has the view that these tools are not all that impressive and there are some trivial problems that they still get tripped up on, and the hallucinations are bad and we're overusing them, et cetera. And we're replacing good workers who can do their jobs with AI tools that are cheaper but can't actually do the job. And so everyone ends up worse off. If you have that view, you should be short the market and short NVIDIA, but that's a totally different view from existential risk. It's actually a view that AI is just not good enough to kill us all because it's only just now gotten good enough to have the right number of fingers on a hand or be able to count the number of R's in the word strawberry or whatever. Now, I don't think that view actually makes any sense. I think these people you could also say computers don't work because I, talked to my desktop computer while it was unplugged and it didn't answer me. Therefore, computers are worthless and it's just a big, expensive paperweight. But yeah, if you misuse a tool or you don't understand how it works, then of course you're not going to get very much out of it. And I think that's where a lot of that AI skepticism comes from, is that they do not really look into how these things work. They don't understand the use cases. They don't really understand where you would or would not use it, and therefore they think it's worthless. But with any new technology, you don't pay attention to what does the average person get out of it or what does the least effective person get out of it. Its use is defined entirely by what is the best use case. That's the only use case you actually care about, and then you care about how it scales, how its costs decline as it scales, and therefore how many new use cases get opened up by that.
Is there a similar sort of a apocalypse scenario in crypto where you could also believe that, the dollar is not going to be the reserve currency or something, but, not short the market or otherwise?
That is also very narrative dependent. So if your view is crypto is going to build up this robust financial ecosystem that does everything that the fiat system does, just more efficiently and without trusted third parties, then you can imagine a scenario where there's a crypto transition that is gradual enough that it's not super disruptive and that just continuously makes the economy more efficient, and therefore you should be long. You could also be a crypto optimist who says that the crypto is basically like the Soros break the Bank of England trade, where as money flows into crypto, it devalues all fiat currencies. That causes massive disruption in the fiat ecosystem, and eventually huge sections of the economy blow up. But the thing that we have left after all of that actually works really well. And that is sort of like a 2008 view, because 2008 was this case where there were parts of the economic system that were just not functioning correctly. They were continuously accumulating excess risks in a way that was totally irresponsible. And at some point it would blow up. And then it did blow up. And what it got replaced with was actually a system that is a lot less flexible and a lot less fun, but that is actually a lot more stable. Like the big banks are far better capitalized than they used to be. They take a different set of risks than they used to, but it's on net probably a set of risks that is less disruptive. That has led to the growth of alternative financial ecosystem that does a lot of things that the big banks did in the 2000s of warehousing risk and repackaging it and selling it and making directional bets on assets and knowing that they can make or lose money. But that new part of the financial system, it is also just much better capitalized than banks. And you just shouldn't have these prop trading firms that are buying all kinds of really illiquid stuff. And they're also 30 times levered, and most of their leverage is very, very short-term funding. Like that's just an insane thing to do. You can have that kind of leverage with certain strategies, but you do want to isolate them to little pockets of the financial system. And what you want to do if you're designing a financial system right, you just want to make sure that everyone knows roughly what risk they're taking. And the most important thing is everyone knows what is money and what is not money, and what is on the continuum of being kind of like money and kind of not like money, and how do things shift along that continuum. Because that's what really blows people up, and that's what actually nukes financial systems, is when you have people who think that some asset is money, like they think it is always worth 100 cents on the dollar, but it gets them an excess return. It's not money. It's something else. And it becomes not money when everyone needs money. And that's the time when you really wish you had it. So that is something that our financial system is just less likely to have in the near future. So it is a more stable system. And yeah, I think that kind of shift, like 2008, it would destroy a lot of market value, cause a lot of disruption, cause a very serious recession. And then if crypto maximalists are right, then what we're left with is actually an economy that grows faster and or is more stable with smaller boom and bust cycles. So we actually end up better off, and in the long run, stocks go up even more. But you could almost say that like Satoshi built something, wrote a white paper to solve the same problem that Bernanke and Geiger and all the rest were also trying to solve in the fiat system, and that fiat got to good enough before perfect got to scale. And that's what we end up with. It's like you have these multiple critiques of the same system, kind of like the Reformation, where you have people just totally splitting off from the original institution. But you also have people within that institution saying, yeah, we actually went a little bit overboard on some of this stuff, and we need to make sure that never happens again. These criticisms are right. But also that because of that, we have to like define ourselves a little bit more sharply, because we're now defined partly in terms of this other alternative thing.
One thing you also write about is how for the Magnificent Seven, AI is sort of underrated in the impact that it's having. Zooming out a bit, 20 years from now, when we look at sort of the, this AI time, similar to how we look at the time of the internet, sort of in the 2000s or late 1990s, it will have a similar reaction in that, hey, there was a bubble, there were some overpriced companies or some companies that weren't in fact valuable, were too early for their time, but this in fact was a revolution and the beginning of much bigger things to come? Or might we look at it something in a different way, or even more powerful than what the internet was?
Yeah, that is a really hard question. So like right now, the scaling laws tend to broadly hold true, and haven't really seen evidence of them slowing down. So it does seem like AI just keeps on going, keeps on getting better, and we rapidly reach the point where the future is just very unpredictable. In the same way that there's this tipping point where you have more mechanical power than human and animal power, and that mechanical power can be used to create more devices that have mechanical power or extract more energy sources for mechanical power. And it's very hard for, you basically someone who looked at like the first steam engine and looked at it pumping water out of a coal mine in order to get more coal that you could feed to a steam engine. They could not have conceived things like railroads and steamships and the ubiquity of steel and stuff like that. It just would have been totally beyond their imagination. And similarly for us, like if there is some tipping point where the cheapest source intelligence is a machine and not hiring a person, then we don't have a good way to model what the future looks like past that point. There's just some fundamental input that used to be gated by a number of humans and is now gated by something else. If things peter out a little bit, like there are plenty of scenarios where AI turns out to be a good business decision, even though it peaks at something slightly better than the current level, where you can replace some of the people on your team with AI agents, but you can't replace all of them. And the AI agents don't get that much better from here because they're trained on the outputs of humans, and they're this blended average, so they can get really, really good relative to the average person, but then they can't get to the point where they're doing just extraordinary things that have never been done before. I try to be agnostic on that, but it's partly because I think there's some value in thinking through what the scenarios look like in both of those cases, but also that it's not like you can plan that far ahead. And I don't think there are a lot of things that you can do today to prepare for either of those worlds other than kind of hunker down, pay close attention, like try to use these tools as much as you can so that you get used to interacting with artificial intelligence at varying levels and figuring out where to deploy different kinds of it. Yeah, I think it's hard to model things beyond that. But what I did write about recently, was that looking at the most recent couple Mag 7 earnings, like the companies are actually getting material revenue from AI and they're investing material amounts in AI. I think it was Microsoft where they said their results were a little bit disappointing, but it's actually because of supply issues. And there was a nice callback to the quarter before where you had, I think, both Microsoft and Meta say that they were more worried about errors of omission. They were more worried about underinvesting in AI than overinvesting in AI. And this, like last quarter, that actually was the correct worry. Like Microsoft did not jam quite enough money into NVIDIA's pockets, and therefore was not able to sell quite enough API calls. You could imagine scenarios where we just run out of use cases for near human intelligence or like better than human intelligence in very narrow domains, et cetera. But we haven't really done that with humans. Like we still do have a shortage of smart people. There are still a lot of ideas that are looking for a brilliant person to spend a couple of years on them. So I don't actually think that there's a demand side problem long term. There is just a market, like a matching problem of how do we develop the right kinds of artificial intelligence? How do we identify the right sets of problems? And then how do we reprioritize when there are some problems that require intelligence to solve, but now that intelligence can be orders of magnitude cheaper and can also be run in parallel and in bursts and things like that.
Yeah, that's a good overview. I do want to also make sure we get to your housing post, because you talked about how expensive housing isn't as clear cut as we imagine it, and it has sort of more indicators or implications than we understand. So why don't you outline what you were saying there?
Yeah, so I think like the first way to caveat that is to say that one of the big reasons that housing is expensive in the developed world is that there are lots of unnecessary regulations that prevent new housing from getting built, especially in very desirable places. We could have denser big cities. We have done it in the past. There are denser places that work just fine. There are a lot of problems and a lot of complexities with that, but there are also a lot of problems and a lot of complexities with a lot of these cities being much too expensive for most people to ever conceivably live in. And so I like the category of complexities, like how do you collect a lot more garbage and how do you have a lot more cops on the corners if more of San Francisco is high-rise apartments instead of single family dwellings. So that's the initial caveat that there are a lot of unforced policy errors that make housing more expensive than it should be. But what I was thinking about was what happens to housing prices relative to rents if the only thing that changes in the economy is a like 1 point increase in growth expectations. And what you assume from that is, okay, people are earning 1% more compounded every year indefinitely on average. And therefore, their ability to pay that rent also goes up by that amount. And so if you are a building owner and you're thinking about buying a building, you can basically say that your total return is rental yield today plus long-term growth in rents. So if long-term growth in rents goes up, you can actually get a lower immediate rental yield, and it's perfectly offset by the future growth. And this happens with stocks too. It's, pretty simple dividend discount model. And if that's the case, then whenever growth expectations go up, the housing price to rent ratio and housing price to income ratio will also go up. So housing actually gets more unaffordable in a growing economy. And that is bad in the sense of it does mean that people are paying more for a product whose quality has not changed at all. But it's a sign of something good, which is people have more money to pay. And so I think and then when you going back to that, the housing supply restriction thing, it does just make sense that in a denser city, there will be more restrictions on building things because there are simply more parties that have to come to some agreement on what gets built. If you build a new building and it needs some extension of the plumbing and electricity systems and telecom systems, et cetera, things have to get dug up on streets and sidewalks that have high foot traffic, and something gets built next to someone who was happy with what was next to them before. They have some interest. They may have too much of a political interest than is really economically justifiable, but they have some interest in affecting that. Whereas if you are building a new suburb on the outskirts of a city and there just wasn't anything there are just fewer constituencies who can say, no, there are fewer people with vested interests. So we should assume that even in an environment where there is a lot more freedom to build and a lot more freedom to improve properties without getting permission from everybody, that there will still be more restrictions in these dense cities that are also pretty high income, pretty high rent places. So in those places, you'd actually expect the ratio of housing prices to rents to go up. And so that means it takes longer to actually buy a home. You are better off, but just over the course of your life, you would spend a larger fraction of your total consumption basket on housing in places that are growing fast. And that is historically the case. Housing as a share of total spending has gone up over time as the economy has gotten bigger. And I think that will continue. This is kind of related to a point that I made in the diff in early 2020 about how when you look at housing price to income ratios, one thing to keep in mind is that if someone moves from a low cost of living city to a high cost of living city and their after tax and after expenses income goes up, it can be the case that they are better off even though they're paying a larger fraction of their income as rent. So if you were paying, say, $2,000 a month in rent in one place and you move to a city where you're paying $5,000 a month in rent, but you also get a $4,000 a month raise, you're better off, assuming all your other costs don't change, you're better off, but also probably the ratio, the fraction of your income that you spend on rent goes up. So part of what we see if we track long-term trends in housing prices versus income is the economic dominance of coastal cities that have very high costs, but also pay really, really high wages. So I think I guess you could say that all of this loops back to our initial discussion on polling and correlations and things. Is that you always want to think about the mechanics of how the numbers you measured actually came to be and what are some of the trends that are cutting in different directions that actually lead to these outcomes. And it's very rare that you have some time series that measures something interesting and is really only measuring the effect of one specific cause. The more interesting the time series, the more likely it is there are a bunch of different causes, a bunch of different feedback loops, and also that people are looking at that time series in order to make the next decision that also affects what the next number in that time series is.
Yeah. I mean, it is amazing how advanced our sort of, understanding and our methods of sort of, assessing, creating information markets. And yet we're still 50-50 coin flip, nobody knows what's going to happen. Isn't that kind of striking?
It seems like the more certainty you have, the less important it is to have elections. If each party nominates someone and Nate Silver puts up his estimate, he says 99.7% chance that it's this side. And on the betting markets, you just can't find someone who is willing to bet on the other side, et cetera. Do you need to bother? Should we all be taking an extra trip on a Tuesday in November? Probably not. It's the meaningful elections should be close to 50-50. If they are meaningful, it's because there are strong opinions on both sides and both sides feel like it's really, really important that they win. And I think people always say that. I think the first election I paid attention to was 2000, and that one, it was supposed to be a really big deal, and it was supposed to be this transformative thing. And then 2004 was even more so, 2008 even more so, and so on and so on. It kind of kept ratcheting up. But I think it's also just objectively true that there are much more meaningful differences between Harris and Trump than there were between Bush and Gore, or between Obama and Romney, or something like that. It is a different election, but it's also, if you have one side where, or if you have more questions about each side's ability to competently execute on the things that it says it wants to do, and you also have questions on how different they will end up being, given that, at least on things like tariffs, there's a fair amount of continuity, like on tariffs and on China policy generally. There's a fair amount of continuity between the Trump and Biden administrations. Like, maybe part of what you're picking up on in these really important elections is a shift in voter priorities that's going to be expressed through which politician wins. And certainly a politician who identifies those shifts early and accelerates them will do better than a politician who doesn't. But if the shift is just a change in people's priorities and a change in the salience of different issues, then it's going to have an effect and it's going to make these elections feel high impact. But the really high impact shift was the change in the underlying opinion of the electorate. Now, if this election does end up being decided by the squirrel used to promote an OnlyFans account or something bizarre like that, that will be disappointing. But it is also the case that if it's a really important election, it's a 50-50 outcome, really, really high stakes, that does make it more sensitive to totally random stuff. That does mean that this is an election where things like whether or not it rains on election day in particular areas in swing states does actually determine who the leader of the free world is in a couple months. Fun times. But you can't escape the contingent nature of history. Like, history would be very, very boring if you had like a little JSON blob describing your starting parameters of the country, and you can just run the simulation forward and find out the exact name and policies and opinions and scandals of whoever's going to be president 100 years from now. That would be very boring. But the trade-off to history is interesting is sometimes it's interesting in just really, really stupid ways.
Is there an explanatory power or predictive power to Elon's quip, the most entertaining outcome is the most likely, or is that just glib?
I want to say some of that is survivorship bias, but there's this argument that humor has this sort of information theory interpretation where when you tell a joke, you are continuously giving people evidence that fits one conclusion, and then you give people one little piece of evidence that delightfully, completely obliterates their expectation, and they realize you're talking about something else. And this is also something that music does, where like a lot of classical music, they will set up the theme, they will do variations, they will do, part of the theme and then switch to something else and it's in a minor key or something like that. And it's fun because you get surprises that it makes sense that they're surprising. It's not totally random. There are patterns, but it's not just endless repetition of the same pattern. It's asking, given this pattern, what are some fun things we could do with it? Or what, if you expect this pattern, what's an interesting surprise that you can get next? And so in that sense, maybe history is just more information dense when it is kind of funny. And when the expected thing happens, there's not that much to say about it. There's not a lot to write in the history books about it. Like, no one is going to write a history of a random congressional campaign where the incumbent started out, incumbent got 80% of the vote last year. And the big question is, do they get 81 or 82% this year? No one's going to write a book about that. It's super boring. So it's a small piece of history, whereas a really big chunk of history will be things like very close fought campaigns where it looked like one side would win, then it looked like another side would win. There were various assassination attempts and scandals and legal cases and things like that. Like, that stuff is a lot more interesting and a lot more worth writing down. So you could flip the Elon claim around and say, like, if it's worth being history, if it's worth getting into the history books, it is going to be funnier than the average thing that happens. But that doesn't quite change the likelihood. It just, I think, changes the retroactive salience of that event. There is this sense of like history is gonna give us a lot of interesting ironies and weird paradoxes and just cases where things could have gone very differently if some minor coincidence had happened or had not happened.
Yeah. Before we get out of here, there's a couple other things I want to get to. One is the idea of smaller social networks. Well, actually, first, before we get to that, on a point on the expensive house pricing, I heard about expensive sort of real estate. I heard of an idea that someone had to, decrease housing prices, which is don't let China, foreign investment, don't let China own real estate. Maybe it was you, I can't remember, but would that be a good potential outcome of, prices might drop if we don't let China sort of, do heavy investment into real estate? And why do we want them owning all this real estate anyway?
Yeah, there is definitely a solid sort of economic populist argument that I think is true of like, if you have a finite amount of space in your country and you're not building quite enough housing, that you are really compounding the problem if you have people who are treating this housing as a speculative asset. And I think it's less China money in the US. Sometimes it's been more Chinese money in Canada, where people did seem to be willing to just own a condo in Vancouver that they were not renting out. So they are just continuously bleeding a little bit of money. But it means that if they ever need to leave China and go to Canada, they have an asset they can sell. They will have enough money to get by. And that doesn't seem to serve the interests of the average Canadian all that much. And so it does make sense to question that. But there's also, if people are buying housing as an investment and they're renting it out, then it doesn't change the total supply of housing. In fact, there was this recent paper arguing that for the large institutional landlords, they actually basically effectively increase the availability of housing because they just manage things a lot more efficiently. They leave their buildings empty less than small scale landlords do. So it might actually net decrease housing costs. Although if you look into it, like one of the reasons they have a cost advantage is that they pay lower property taxes because they're more aggressive at disputing those taxes. So it is like sort of redistribution from like towards average people in their capacity as homeowners, but away from average people as they're in their capacity of recipients of local services that are funded through property taxes. So there's a little bit of ambiguity there, depending on what part of the system you're actually isolating in order to analyze. I think if you do care about, like the place to care about overseas investors owning lots of real estate in the US is, and this is something that it's getting more media attention lately, that there are entities that appear to be linked to China that are really, really interested in buying farmland that has a line of sight to US military bases. And that is not the kind of thing that China would allow. I don't think that, Russia would allow an American firm to just buy lots of land all around Russian military bases. And, even if they didn't catch us spying, like they would look askance at that and assume that there's a motivation there. And for all I know, there is some number crunching Chinese real estate private equity firm that has done a bunch of regressions and realized that actually buying land near military bases is the new like buying land in suburban Redmond because Microsoft is adding so many employees and they're all just going to buy these houses that give them a 30-minute commute to Microsoft HQ. Like there are theses like that, but this is probably not that. This is probably some kind of longstanding, gradual, maybe kind of clumsy spying campaign, or at least like it looks suspicious enough that I would love to hear a really, really good explanation for why this phenomenon exists. But if overseas investors are overpaying for property in big US cities, I think this is a better solution, is just make it easier to build lots of housing. Like if New York made it much easier to build housing, and if San Francisco did that, and if one of the results of that was that a lot of corrupt oligarchs from various countries that do not get along too well with the US suddenly have one of their big assets mostly wiped out, or at least have its value significantly impaired, such that they give up and sell it and just stash their wealth in gold bars and fine art or whatever else they like to buy. Maybe that's a win for everybody. Like we get more housing, we get to slightly soak the rich, but it's not America's rich who are all wonderful and virtuous. It's actually the enemies of America's rich, and who knows what they're up to. So maybe that is probably a better solution. I just don't get too worked up about foreign investors buying lots of property in the US, because I don't think it's a huge impact on the overall supply of property. Like they don't like to buy the houses that a newly married couple is going to move into so they can start having kids. They're buying really, really expensive penthouses and things like that. They're buying very luxury properties. And so it's not like the people getting priced out are just not that politically sympathetic. And I really don't worry that much if there is some distressed credit trader who like would be able to pay $8 million for this condo, but has to pay 10 because there's a Russian oligarch who bought the one next door and pushed up the prices. Like, is that economically optimal? No, but is that the biggest problem that we face, or anywhere near that? No, also no.
Do you have a hard stop right now, or should I let you go and we do it? Okay, maybe last question, then we'll get out of here. The social network part. Do you think these small social networks can be venture scale businesses? To harken back to our venture scale conversation, there's this fragmenting in social media, but TBD of how big these can get. And we're talking about, you wrote about Blue Sky that raised a Series A, just as it.
Yeah, Blue Sky is weird. Like I do think that small social networks like that, they are an option on big networks messing up in identical ways. And Reddit benefited a lot from one of the original big influxes of new Reddit users was when DVD decryption keys got leaked and Dig started banning people for posting them. And so people just flooded the homepage with variants on these keys, and Reddit allowed people to post the keys. And so a lot of people just moved to Reddit. And so Reddit was, in retrospect, partly a bet that Dig would mess something up and then everyone would move there. On the other hand, Reddit has had a bunch of cases where users say they hate Reddit and they want to just move on to some other service. And Reddit's source code a long time ago was open source. You can put together something that is, it's not Reddit, but it's Reddit-like. But none of those have really gotten huge traction. There are a few that exist, and some of them have gelled around particular pre-existing communities, but there hasn't been some existential threat to Reddit from stuff like that, even though their user base does get really, really ornery from time to time. So I think that when you think about small scale social networks, I think there are two ways to think about it. One is is this small scale of it's doing a similar thing to a big network, it's just not big yet. And those can be economically viable. Every big social network started out as a small one. Since none of the big ones that are out there now are among the first, we know that the small ones can outgrow the big ones. They can come to dominate them, but that doesn't have to keep happening forever. And then if you go a little bit smaller scale, if you say this is a network that's small because there is a particular set of people who'd be interested in it, and they largely have some kind of loose real life social network already, and this is just a place for them to convene, those can exist, those can survive for a really long time, but they're not venture scalable, and they really shouldn't work as a private company. They are closer to an actual community than a platform that hosts communities. So I think those, when they exist, it's usually a labor of love, and it's usually something where whoever is running it is, one, not making any money, and two, is still dealing with tedious moderation issues. But the issues are even more annoying because it's not just these two random people got into a slap fight in the comment section. It's two of my friends, or at least loose acquaintances, are fighting, and I'm in the middle of this, and I have to make a decision, and I can ban both of them or punish one and not the other, and no one's going to be happy with me no matter what I do. So you have to really, really want the community to exist to ever bother creating one of those things. And there's not a good way to monetize it. Even if there is economic activity happening in that network, it's not really happening in a way where there's an easy way to capture the value, because since these people already know each other, even if you allow people to transact, they will probably just go around whatever the transaction mechanism is if they have to pay extra fees to transact directly on platform. So yeah, I don't think it works as venture scale, but I think it's actually a nice complement to being in venture, that if you have this community where you're just expanding your surface area, you will hear more rumors, you will hear about more interesting ideas, you will get introduced to more people. And so you just get that surface area that you need to know everything that's going on, so you can invest in it in an opportune time. So not venture scale, but a thing venture capitalists should do.
Totally. Well, that's something I definitely resonate with and try to do myself. Well, Bern, we're at time. This has been a fascinating discussion. Hopefully in our next conversation, we will know who the next president is.
Who knows? Yeah.
Yeah. Happy election day, everybody.
Happy election day.
Thanks for listening to The Riff. Please go follow and subscribe, give us 5 stars, and check out Bern's excellent newsletter, The Diff, if you haven't already.